Hello everyone, welcome to another lesson on super trade. Today we are going to discuss about a very popular indicator which is known as MACD, moving average convergence and divergence, and how to use the moving average. So all you need to do is go to the indicator section and simply write MACD, and you will see first one you will get here, moving average convergence and divergence. Click on it. All right, I got two of it, so let me cancel one of it. So you got MACD here. Now what is MACD? MACD is nothing but a kind of a moving average that we use as a indicator. Now it's also a lagging indicator, but we can use, most of the indicator is a lagging indicator in fact, but you can make a lagging indicator a leading indicator. So if I click here, you can simply double click it, or let's go to the setting here. All right, so you see here, this is nothing but an average, two averages here. You have 12 moving average, exponential moving average, and 26 moving average, which corresponds to the MACD line and the signal line. The blue line is the MACD line and the red one is the signal line. Now how popularly MACD signal is used, and this what you can see here, this is the histogram. All right, this green one, deep green and light green, and the red one is the histogram. It shows you the difference between the two lines. It means this blue line is the MACD line and the red line is the signal line. Whatever is the difference between them is shown here as a histogram. And if the difference, if suppose the MACD line is over the signal line, you'll see a green histogram. But wherever the MACD line, that is the blue line, is below the signal line, that is the red line, you will see a negative histogram. All right, so how popularly trade is taken, this is also considered as a momentum indicator or an oscillator. How a trade is taken here? So whenever, now you see the middle line is considered as the zero line here. All right, in between the line here, you see the value here, if you see here, the value is here is 0. So how the trade is taken generally is that whenever the blue line, that is the MACD line, cuts the signal line from below, and you'll see the histogram will turn to green, then a trade is taken. And you see here correspondingly, you see the candle here, the cut has happened and the histogram turned to green, and you see then the ride happens up. Likewise, you see here the MACD line is cutting the signal line, and you see there will be a little bit of a fall. Now the most effectively what we say is that the MACD line should cut the signal line from below 0, then you will get a better ride, and the other way around, from above 0, the MACD line should cut from above the signal line, then you will get a down signal. But the thing is, many times MACD signal are considered to be false, and will lead to a lot of wrong trades taken by the people. You see here, let me pick any point. Here you see here the blue line is cutting the red line, that MACD line is cutting the signal line, and you see the histogram has turned to green. If suppose you would have taken trade over here, then the trade doesn't move. In fact, it comes little bit down. You have to wait for long for a trade. Eventually it will go up. So many times a wrong indication is given by MACD line. If you take it blindly, then you will end up blowing up your capital and lose all your money. So that is now how MACD is used. I prefer to use MACD line indicator as a confluence, as a supporting indicator to give me a confirmation whether should I take the trade or not. Now if you remember the past lesson when wherein we have learnt about price action, we have tried to find out support and resistance. Now if you try to complement the support and resistance, complement it with MACD, then you will get a very beautiful trades many a times. So let's for now forget about MACD. Just hold on. and let's draw a price action. Let's go for a price action. So you see here where we can see the so we can see here we can draw a price here, we can draw a block over here, then furthermore we can also draw something over here. You see, this is a Bajaj Finance chart that will be applicable to whichever trade. Then we can also do it here over here. You see, this is here you have one point of resistance, then the price is broken, it becomes support, and this acts as a support later on as well. So let's take this point here as well. So now let's put back MACD. Now you see here, as I've told you, when to take a trade when the bounce up is happening. For example, you see here, now we had drawn here the support line, and now whether you should take the trade here or not. So the cut doesn't happen here. So maybe the price would have gone here and tested the support, the cut doesn't happen, cut doesn't happen, cut doesn't happen. But you see over here the histogram turns green. You see, there is an interchange between now. You see, if you zoom it here, you see here the cut actually happens. So it gives me the confirmation to take the trade. It gives me the confirmation to take the trade, and we see that we are upward on the support zone. So if suppose you would have taken a trade here when MACD has made the cut, and then you are above the support, and you see you can enter at this point and exit at this point. So how much you could make from here to here? Just hold on. You can make approximately 39-40%. All right, 39-40% you could make. So really nice. Again you see, come here, you see again the price has breached up, it has come down, tested the support. Now you see here it has bounced up over there. You see, and where is the MACD? Are you getting the cut over here? No, the histogram is still red. You are getting a green candle, but the histogram is still red. So you can avoid this particular trade. So again it goes up, it comes down, and you see again here. Now when it bounces up, you see the cut happens over here. Can you see the cut happens over here? The cut happens over here. So you can see here the you see the cut happens over here, and correspondingly you see you getting a bounce up the support over here. So it means you can take a trade over here and you can ride along. So you can take an exit anywhere you want. So if you're a swing trader, 10% you can, if suppose you don't have any support zone here, because you don't know where to exit, you don't know where to exit. So in that case you can just look at where is the nearest high. Here is the nearest high. So it means from here you can exit here, but that's a very less profit. So you can go for a 10% mark. As I say, usually you will get a 10% if the stock is a good stock and there is a momentum into that stock. All right, let's go for some other stock, any particular stock. Let's say let's go for Britannia Industries. All right, so likewise we have to draw the price action. We have to draw the, as we have learned in the past. Those who have missed the previous lesson on price action, please watch it. So you see I can make a, you see here it's a bounces up, here again it bounces up, here again it bounces up, here again it bounces up so many times. It means this is a very, very strong support zone. All right, so that will be a point of reference for me in future. So let me draw the support line here, taking as many points, touching as many points as possible. So I have taken this into consideration now. All right, clear. So first bounce happened, second bounce I would have drawn here, and maybe third and fourth was not visible to me. So whether I should take a trade or not, So let's see, after the first two bounces we would have drawn the support line. So now let's go and check out for MACD. You see here, then here over here the price comes down, touch the supports, and then you see the cut happens over here and the histogram turns green and you are over the support, bounced up the support. You can take a trade over here and ride along. Where to exit? You see this is the next high. You can exit at this point. All right, and because actually the price moves down from this point only. You see this was the previous high, the price goes to this point here and it comes down. So you could have entered at this point and exited here. So if you measure how much you could have made if you would have entered at this point and exited over here, so you could have made easily around 7 to 8%. So no problem at all. So again you see again the price comes down here, and then you see again it bounces up. This time a gap up happens, bounces up here, and you see MACD signal has given a go ahead. It means that is an additional confirmation. You can take the trade again here and you can either exit here or exit to the next point here. So it means here you will get a better profitability. If I measure from here, here is the cut happening and you're bouncing up the support, and if you exit to this point you're getting around 11%. All right, you're getting around 11%. So let's take some other stock. Let's take Maruti. All right, so again let's draw the support and resistance lines, the price action. You see again here is the support, you can see here. So I can connect these points to give me the future reference here. So you see I will take these points, and once it has broken, generally when a support is broken it no more remains relevant, but when it will become a resistance eventually. So you see resistance has happened. Now whether to take a trade or not, again I will go to the MACD guru. All right, so MACD, so you see here it's bouncing up the support. I know the support zone, bouncing up the support, and here almost the cut happens here. You see, let me zoom it further. Here again you see MACD line is above the signal line, so cut has already happened, and so you are above the support zone, so you can take a trade here and you can ride along. All right, again you see you come to this point, but the cut doesn't happen here, cut happens over here. So you are above the support zone and the cut happens little above the support. You can still take a trade and ride up. All right, so you can avoid all this signal. You see here the cut happened, but you are too far from the support, so it's better to avoid this kind of entry. So it means in future if the price comes down to this point, and it will eventually come down to this point, when it comes down to this point, all right, in the next 2-3 weeks, 1 month, 2 months, whenever it comes down to this point and we have to take a trade, just do not enter the trade blindly. You see the bounce of the support and get a confirmation from MACD whether the cut is happening or not. If the cut is happening and you got a bounce of the support, that's an additional confirmation. You can take this trade as well. You can use this in the concept of RSI as well. Instead of MACD, you can consider this through RSI as well. So let's take RSI and find out whether it works out or not. So let's go for RSI, relative strength index. We have already covered RSI. So let me change the settings of RSI. Remember what are the values I had told you. So 14 period RSI is fine. Style, we don't need this one. Upper volume band, this is 70-30. So middle band we don't want. Let's change it to 60. Lower band will change it to 40. All right, 60 and 40. So that's fine, and press it OK. So what happens here now? RSI going above 60, you have to see. So you see here, the RSI is bouncing from 40. So remember also one thing, if RSI is bouncing from above 40, that is also a confirmation that you can take a trade. It's going above 60, it's wonderful, but even if it's bouncing above 40, then also you can take a trade here and ride along. Here again you see it's going into 40, here it's take a bounce from 40 and goes up, you can take a trade here. So you can use RSI also in this respect. Here you see, in this case here, what happens here, you see here it goes almost above, here it goes up, bounces above 40, and you see it goes above 40 and you can enter the trade. It means new ride is initiated. So in case of RSI, I have told you to take only when it's above 60, but the thing is, if RSI is going above or it's taking a bounce from up 40 and it's also bouncing from this line, then you can also take the trade. But MACD would be a better one because it will give you a better confirmation. According to your convenience, you can choose any of it. You see again, it's bouncing from above 40, so you can take the trade. Some people use it for 50 as well. That we'll see in later videos. On top of that, you can use moving average here, that we have done before. You see here, you can use moving average here as well. You see, so this price comes down and you see this is the 200 moving average. When it takes a bounce up from 200 moving average, you can take straight away the trade and go along. So again here, price action, you see here, it comes here, it goes up, but it is below the 200 moving average, so you are not getting a better confirmation. It will show you a lot of whipsaws. So crossover will take. You see, it's going above, crossover is happening over here, you can take the trade. Again, you see it's bouncing up from here, crossover happens, you can take the trade. So you can take moving average as well as a confirmation, but as you have seen, MACD gives you always a better entry point when it's used in conjunction with the price action. So I prefer to use personally moving average, convergence and divergence to find out whether I should enter when the bounce up is happening from the support zone. I hope this video helps you. So please keep practicing and let's make money together. Bye bye. Have a nice day.